Hey guys, how's it going? Welcome to the London session recap for Wednesday the 9th of March 2022. So, quick recap of the old, higher time frames. Remember the analysis I posted at the start of the week, right? Don't usually look at the monthly chart, but when we're in a key level, of course we want to pay attention to it. Why? Well, even though I believe based on the way in which I read the market, this is a weak low, right? Because it failed to take out the high. Remember I was saying we're starting to see potential demand chain forming, but regardless of all of that, right? Literally, this is a monthly candle that obviously led to an internal breaker structure. Generally, you're going to see at least a bit of a reaction, even if it literally just gives us a bit of a wick on the monthly chart, right? That could be, 50 to a few hundred pips worth of a bullish reaction. So it's worth paying attention to, even though we're trading intraday, right? Because it can give a lot more confluence to looking for those long positions. Likewise, we have an extreme weekly demand zone, right, all the way within here, which we're seeing a pretty decent reaction from, and then within there, of course, we've hit the extreme daily zone as well here, right, nested within there, nice inducement, etc., right? So real decent area to add to confluence for looking for longs. Obviously, we don't have to jump into the first long. We can look for our lower time frames to guide us first, but when those lower time frames do give us those confirmations, right, now you can expect that there's great risk to reward here, right, for price to, we could see a daily pullback all the way up into the premium, right, or at a bare minimum potentially into the price swing range, right? That's a lot of potential RR on our side. So then when we go down to the 4-hour chart, it wasn't too clear the end of last week and the start of this week, because we're kind of chopping around, obviously a bit of a sweep after the initial mitigation of the 4-hour demand within the daily demand, right? So it's not always going to be picture perfect where you literally get a touch into demand, then we get a nice bullish chalk, and then we get a real nice perfect counter trend pullback, right? To get all of this momentum to change, orders need to exchange hands, right? That's where we start to see the accumulation phase. Think about it like a cruise liner trying to turn around, right? It's not going to be instant. It's going to take a while for there to be a higher time frame pullback. On a lower time frames, it's going to chop around for a bit. So yes, we did initially have that 4-hour bullish chalk here, which was our first sort of mechanical signal from a structure perspective that the 4-hour is now going to pull back. But at that point, we still had this sort of nearest 4-hour level of supply. So that's why I was saying to you, really once this clears, that's when we'll have a big more of a green light that we're going to see that bullish move. Okay, so coming into London today, we then had a clear supply fail for our supplies fail, but we also even have, even from a structure perspective, right, this is a much clearer, internal break of structure. Yes, this is a valid chart, but also, we can use a little bit of nuance here. When we see this supply go and we clearly see price break up above it, right, now it's a very, very good sign that the 4-hour is going to have that deeper pullback, right? We're almost at the EQ if you map your 4-hour swing range the same way as me. But I wouldn't be surprised, if we see a deeper pullback. None of these supply zones are super, super clear. But all of that aside, once we see that go, that's when, it's a lot more likely you're going to see a bit more of an aggressive and higher volume or more impulsive move on that pullback. So today, is a lot different from yesterday in terms of that. Another way of reading what I just said is on the M15, what do we have? Well, when did this happen? Let's see the time. Towards the end of New York, right, 5:30 GMT. We had our second break of structure. Okay, so we initially switched bullish here on the 7th of March at New York Open, right? But remember what we always say about one break of structure. Although for me and the way I read the market, I classify one swing boss as a trend change. For me, that is enough to say there is a trend change. But why is it that some people want to see a double break of structure before they confirm the trend change? Well, that's because they want to see both a higher high and a higher low, right? But to get that higher low, the higher low is only confirmed after we get the second break of structure, because it's only when we get that second break of structure here that we can then look back and go, oh yeah, this is the higher low. Because until that happens at this point, it could just be one break of structure here, and then price could continue bearish, right? There is no higher low at that point. That's why you need the second break of structure to confirm that we have both a higher high and a higher low, right? Because remember, at this point, we had that break of structure, but there was 4-hour supply here, right? And then we had an M15 supply chain within it, etc., etc. So that's why you kind of shorting from here at this point was a lot different than potentially shorting today, which we'll get into in a minute, right? Because that initial break of structure here on the 7th of March could have literally just been literally just a liquidity grab behind this high, but also just a switch bullish to mitigate that 4-hour supply to then continue lower. But once that 4-hour supply, I'll try and show you on 2 time frames, today, or I should say more correctly, yesterday at the end of New York was broken and cleared here, right? Now it's a hell of a lot more bullish, right, to get that pullback. We now have a double breaker structure, which gives us both our higher high and our higher low, and that's often when it's a lot higher probability to play those counter higher time frame trend moves, right, counter to the 4-hour and the daily. So I'll talk about this at length in the putting it all together module, specifically the lesson called trading against the higher time frame trend, I believe it's called. So yeah, it kind of says what it does in the tin. Yeah, sorry, lost my train of thought then. So yeah, so once we had this, right, now longs become even higher probability, but also if you can get well positioned, you can hold on to them and try and target that 4-hour pullback for a lot higher risk to reward. So coming into London, where were we? Price was around this level here. So what's the first thing we do? We make sure we have our correct M15 range map. So that was the last breaker structure. So we look back, where was the lowest point that broke this high? After this high was printed, it was obviously this low down here, okay? So now we're trading between this poorly drawn swing range here. Cool, so where are the unmitigated levels of demand at which we could potentially expect price to come down? Well, this extreme is already mitigated. We have this mitigation, right? This demand chain from yesterday, all of this is mitigated. So that then brings us to this level here. So yes, there is a possibility that price could come down to the unmitigated refined pivot, but what you'll find way more often than not is that if price has kind of mitigated the range, right, this, at least this sort of pivot range, the last 2 sells before the buy, it's more likely than not that price isn't going to come back from this level. Of course it can happen, and this could just be inducement, but more often than not, I'm happy to then follow the supply chain, follow the mitigations, and then for me, the 2 levels I was looking at is this low here, and then obviously the one that I also had drawn on, right, following this little chain here is we had this one here. So this is not the most highest probability in the world, especially if we draw on our premium discount of the range. So from the low, right, just drawing over here, so it's a little bit neater. Right, this is in the premium, and it's very easily could have been inducement, right, for this level here. But I'm more than happy to take the risk of looking for longs within here. If it doesn't work out, if price breaks through, fine, then look for longs from within here, right? If that fails, fine, then we can look for the longs from within here, right? That's just part of the probabilities we have to play, right? Cool. Sorry, I just got something on there. So yeah, so that's basically to explain the logic behind why I was looking at this POI and this POI. Another thing to note as well is if this POI is literally coming into Frankfurt and London Open, very often they're going to play out the majority of the time, right? As price is near it, you're usually going to see at least a decent reaction as that volume kicks in, comes to the nearest M15 POI, especially when it's pro trend, and you're usually going to get a decent move, okay? Session open is really, really key, really, really important. They're the highest sort of probability of windows to be looking for entries within generally. Okay. Also, yes, technically this is a flip zone for me. It did flip the supply that was left within this wick, right? Price came into it, reacted, pushed up, following the demand chain, swept the liquidity below this low. Not something I'm massively reading into. But yeah, so there are all the reasons why it's a valid POI and why we're looking for longs within here to target this week high. We'll talk about the supply level in a minute, but focusing on the longs, right, is the major key here. Also, this here is not a bearish chalk. All of these candles break the prior candle's high, so that's all part of one move. Then we pull back into demand, right, and then we go. So let's take a look at the old M1 entries. So obviously we've built some really nice equal lows within here, right, building that inducement into our M15 POI. For me, there's kind of 2 levels on the M1 if you're going to refine the M15 zone in which you could look at. Obviously we have the extreme, but even this, right, I kind of, if you look at it, right, if you look at the sell to buy candle, it was pretty much already mitigated, so there wasn't a massive chance price was going to come lower, but it just adds the probability of kind of looking at the decisional here. You can also draw on the actual demand chain there. For me, this is all kind of mitigated, right? So it's either really going to be here or it's going to be the extreme. Not something I would personally want to set a risk entry on from here, but we can look to play the confirmation entry on. So we've got a beautiful reaction, exactly what we want to see. Liquidation, higher time frame mitigation, V-shaped reaction. Okay, so then what's the bare minimum that I need to then look for an entry, right? If I'm looking for the confirmation entry, I need to see the M1 change of character, which would be this high here, right? This is obviously the nearest M1 internal high, because we had a straight down move, and then we need to look for that high to break, okay? So let me bring it back on bar replay, actually, we can kind of talk through thought process as well for the flip. So this being M1 supply, right? So price is coming into it and we want to see the flip and the chalk. So as price comes in, right, we now pull back and we start to get the reaction. So this is what we can mark out as the top of the reaction, right? So we're looking for price to break and close above that dashed line for the flip to fail, or the flip to occur, right, to have the fail reaction. And we're looking for price just to wick that solid red line for the chalk. Okay, so now we have the chalk. Okay, perfect, right? So for the flip though, we need a candle closure above this dashed line, which we didn't get, right? It was very, very messy. Okay, so it's just moving along, it's moving along, no entry here, no entry here. And then we got the closure above, right? One candle back here, but where am I going to enter, right? For me, nothing made sense here, right? This is all mitigated, you know, that's not an entry, it's messy. Nothing really makes sense to me to want to put an order in here, right? There's no clear demand. Even though we now have the reaction above, you know, the actual initial pullback has all been mitigated here. So there's nothing here for me. Also at this point, you know, I was thinking the extreme doesn't look that clean. You know, the way I would draw demand here, you can draw it like this, right? That, you know, it is valid. You can go through the timeframes to find where the next candle closes above the wick. Obviously you can draw it like that as well, but that's a bullish candle before a bullish candle. So then if you want to be super strict, you can refine it to here, which if we drop down on the 30 seconds should probably be, yeah, see, that gives you the bearish candle that's engulfed by the bullish candle, but you're just reading that on the M1 time frame. Okay, so there's a few ways in which you can read demand there. It depends on how strict you want to be with the way in which you define your zone. So that was that level like that. And then at this point, okay, this is what I really liked, because then we got a sweep, okay, of this low, right? So we've got a clear sweep zone, right? And now we're clearly breaking up with a lot of momentum, okay? So then this was a level in which I was happy to set an entry order on, but obviously it's quite a big candle, price is quite volatile. So I line this up with a 2-pip stop around the EQ, okay? And then let's see what happens next. So then price comes back down and it rejects the distal, or, you know, a bit of the zone, and moves away. So at this point, as soon as I did that, I cancelled my order, because yes, price could come lower and it could mitigate some orders within here and continue on. But for me, you know, even if it was to just mitigate the range, generally, you know, I want to cancel my order. But the fact that it's mitigated the actual, you know, refined single candle pivot, a pretty decent, you know, dive into it and reacted away, that for me, it's done now. I'm no longer interested. Order has been cancelled. Okay, so for me, that's just played out. So you can draw that on as mitigated. Okay, now at this point, just move it on a little bit. All right, as we broke up a little bit higher and we had a breaker structure above here. This is a poor trade, and one in which I took a -1R loss on. So let's draw it on with the actual entry tool I use. This is where, because I liked the higher time frames, I saw momentum coming in. I was basically just following the bullish order flow at this point. I knew the extreme was unmitigated, but I didn't really like the look of the candles. I'd seen that we swept liquidity. We continue up with a lot of momentum. I was happy to basically just start to look to get in. So let me just play this out and then I'll kind of explain my thought process on this. I had it roughly around there. I just wanted the 2-pip stop below the low, and then price came in and stopped me out. Okay, so the reason why I think this is low probability, a few reasons. One, it didn't sweep any liquidity. It's just a straight movement up, straight movement back, and then a movement up. There's no inducement in the leg, because all of these candles break the prior candles high. You know, arguably that's an inducement. It would be on the seconds time frame, but nothing that clear. But I think the main negative factor at this point is it's basically moved up to the top of this range, right? So yes, these are weak highs and we expect them to break. You know, price has pretty much kind of made its attempt at trying to break those highs. It's pretty much mitigated the extreme supply and it's coming straight back down, okay? So not well priced at this point on the M1, and this is why I'm not a big fan of kind of chasing the move later on. And if I do, I want to see generally a sweep of liquidity. So we'd had that here, so I was kind of happy to just keep chasing it. It is what it is. It's not the highest probability trade in the world. It's a loss. I was happy to take it. So then once I got stopped out, right, I'm then looking at the extreme. But I wasn't in love with the POI really, but I wanted to see what happened when it came in and basically wait for an M1 confirmation entry. Why? Well, also because at that point on the M15, right, and I'll keep saying right, I'm going to try and stop saying it. you can see this supply chain sort of starting to form again, right? It kind of made its attempt at coming up, and then it's coming back down. Now, yes, technically you can say it's weak, but these can still play out a lot of time. It's pro trend. It's just a bit of volatility for it's trying to go. So that's why I'm still happy to look for longs within here. It is still valid to take a risk entry, right? It's pro trend. These are going to play out way more often than not. I just wanted to wait for a confirmation entry on the M1. So let's play it forward as price comes in. All right, so now we're building some nice perfect equal lows, which is exactly what we want to see, right? Inducement into our POI, and then we got a beautiful reaction away. So at this point, what I was looking for is a break of the M1 high, which obviously isn't ideal because when it's this volatile and the candles are big, confirmation is going to be way too high up. Ideally, what you want to see, right, is price come in, and then you get that, and then straight away you're getting in, right? That's really ideally what you want to see. That's kind of the nicest, highest probability trade. So as soon as it's kind of giving me this big reaction, I'm already thinking, okay, probably not going to get my entry now. So supply holds, right, and then we come lower. So then again, once we take this low, we come deeper into the POI. Essentially, you're sweeping this low. Now you can move down the chalk line. Just want to double check exactly where this would be. So this would be inside bar. So yeah, so this would be the chalk line that you see go. All right, the change of character. This would be the active internal high. At this point, it breaks. Okay, so now I've got my confirmation entry of the extreme POI. Perfect. Where am I going to enter? Well, look at this. It's like 7 pips big all the way up to the high of that candle, right? Obviously, I don't really want to. I'm happy to adjust my stop a little bit for volatility, but for me, it was just massive at this point. So I was looking at price coming down to at least this wick. I think I set a 3 pip support. I can't remember exactly now. I was willing to obviously give it a little bit more. That blue is going to annoy my OCD. I need to save a new setting now with this volatility, but there has something like that. All right, and then price came in and it just went, right? It just absolutely flew at this point. So yeah, it is what it is. Volatility just didn't happen. So yes, this is a valid risk entry on the extreme. Whether you call it risk or confirmation, this is why I said, right, I've tried to explain a few times, it gets a little bit convoluted with exactly which way you want to explain it, because for me the true risk entry would be this here, right? Selling it on the M1 zone within the M15 zone. Like, that's a true risk entry for me. When we've kind of had the movement way and come back in, then you're playing the confirmation. This essentially is a confirmation of this level, this POI, but what I was looking for is a confirmation of this red POI here, right? Which we did technically get, right? We got the chalk. It then came back into that demand range, right? Mitigated the distal of it and went away. It's just volatile, right? That was all it needed to continue the movement. Once that range was gone, it was gone. So I didn't get my entry. So it is what it is. Took that loss there. It does meet my plan. It's not the highest probability trade in the world, which I've tried to explain, but I was kind of happy because of the higher time frames, right? This is when I'm willing to be a bit more aggressive and a bit more lenient and try and get in. Now at this point here, this is where you kind of, if you want to look for momentum, typically what I try to look for is I want to see price pull back on the M1, right? Have a mitigation here. And then ideally, it will then sweep liquidity like that, then continue up. So then you have a sweep zone, and then I'd be looking to enter on something like this, okay? So really, I want to see at least a sweep of liquidity, and ideally there's already been a mitigation, because the reason why I want to see a mitigation is because if there isn't, then there could be something unmitigated below, and it's likely price will kind of come back for that and then go. Whereas if you've seen one mitigation, then you can kind of start to follow the demand chain, and that's typically what I like to see, something a bit more cleaner on the M1 continuations. In this instance, technically we did have a flip on the M1. It's not the cleanest, but if you're kind of looking at these unstream unmitigated wicks, right, I had a reaction. It did have a sweep of liquidity, which I like, right? And a good one at that, because it's a low that caused a high, and then price comes back down and takes that low, right? That's a low that caused a high. So the structural liquidity below it, price comes back down, grabs those orders, and then flips the extreme M1 supply. Right, so you could have taken this as an aggressive continuation. But for me, the only thing it didn't have was the mitigation, right? I hadn't really mitigated anything. Whereas if this move here had obviously it would look a bit different, but if it had a mitigated, say this demand here, right, this low would come in and then done that, then that would be a much higher probability continuation, in my opinion. So it is there, not one that I took or was looking at, but I'm trying to spend a lot more sort of time studying these M1 continuations now, looking at how we can get in further in a leg. But one of the other really, really key things about this is you want to do it only when momentum is super strong. It's like a session open sort of trade. Momentum's really going for it. That's when you want to be doing it. Otherwise, you're going to get very, very burnt doing at these. And until you're consistent looking for the trades down here, I'd kind of recommend, in my opinion, staying away from them. But obviously, you don't have to listen to me. Cool. So at that point, we then reached into M15 supply. Now, if you've been looking at my analysis pre-session, you would have seen I had this basically drawn all the way over here. That's just to be aware of it, right? Because you might see a reaction. If you're any longs, you might want to take some partial profits here. And of course, you can look for shorts from there, but you have to realize it's super, super low probability. A few obvious reasons. One, it's a weak M15 swing high. Obviously, we're bullish. It's weak because it hasn't formed a swing low. Two, like I was saying, we've now had that double break of structure on the M15, so it's very, very likely we're now going to see that aggressive or more volatile 4-hour pullback, right? 4-hour supply has been cleared, etc., etc. It's all starting to look a lot more bullish. Two, this here did not break any structure whatsoever on this leg, right? Because this is one straight push. There's no structure in this leg. Whereas here, you see this supply here, it did break this low, right? That was an internal low that broke this high. So then at least price breaks some form of structure, which just gives this a bit more credence. And also obviously it had the 4-hour supply, etc., etc., etc. Whereas this broke nothing. So shorting within here is a hell of a lot more riskier to do that. Generally, when I draw these on, it's more so then you can see the interaction. So now we have a valid supply zone. Okay. It's not to say you can't short from these, but I want you to understand that this is probably as low probability as it gets compared to, say shorting for something like this. Yeah, that's kind of all I have to say on that, really. And now price has shot up. So, yeah, hopefully you guys can kind of study the M15 price action. The M15 was super, super clear overall. Key lesson being, once we get that double break of structure, it's a lot more confirmed that we're now going to get that sustained M15 trend. The 4-hour supply had failed. Now we can look to target up into the 4-hour EQ. Again, don't be afraid of these M15 entries, right? You could have got in with a 5 pip stop here, etc., and been gone away. So, yeah, for me, it was a little bit tricky on the M1. That flip would have been perfect if it had played out nicely and then gone. But yeah, it ends up not getting tagged. And then I followed kind of the demand chain. But yeah, hopefully you guys can understand the main negative confluences of why this wasn't good. At that point, it kind of tried to make its attempt at breaking highs and it failed. But, on another day, potentially there would have been a clear demand chain and it would have gone and we'd have had all of that liquidity to target and it would have looked super clear. Is what it is. I was happy to take the risk on this because of the higher time frames. Then when we came into the extreme, I was looking for the confirmation entry, but didn't quite get it here on the M1. It just mitigated right at the top of the candle, the top of the demand range, and went. So it is frustrating. It's not easy to watch these moves go without you. It is what it is. But all you can do is try and keep a neutral mindset, study how the moves play out, how best you can get in from it, how best you could learn it, and stay away from these counter trend trades, right? That they're really not worth it, in my opinion, if you're not already consistent at the pro trend stuff, right? You have to think about what's scalable, what you're going to be doing on large capital, and are you really going to want to risk 10, 50, 100k on a trade like that? Maybe just some food for thought, right? So yes, now we're having that decent pullback. I don't really like the 4-hour swing range at the moment. It's not the most convincing of pullbacks, but it is what it is. We're at least up above the EQ of that. We do have this 4-hour flip zone that I'm looking at. The candles aren't the cleanest because obviously we had the initial reaction from here. So maybe you could clean this up in the 8-hour, 12-hour or something. I'm kind of happy to leave it like this because obviously I'm not just going to jump into the first M1 entry in here. You want to see price start to really build. Ideally, at a minimum, you want to wait for an M15 chalk against the M15 trend. Or you can even just wait for the M15 to switch bearish, right? Stick to the beginner trade plan and just keep trading in line with the pro M15 stuff, right? Because, remember all those lessons we had back around this section of price action for you guys who were Photon members back then, or watch the after training video. There's a few videos in all of this price action where essentially if we're going to see a very, very big pullback, because don't forget, this is the daily range. I'm not saying this will happen, but we could very easily get a pullback up into towards these prices, right? And we're also coming off monthly demand. So there is a possibility we could switch bullish. I'm not saying we will, but you just have to have these aware in the back of your mind, right? So what you can look for is trades within here that yes are pro trend, and be aware of that, but also pay yourself, because what can happen is it can give short-term reactions, right, back into demand, then we continue up, short-term reactions, etc., until then we then switch bearish, right? So just be aware of that in the back of your mind and start to play ping pong between these zones, but manage your expectations, right? So yeah, this will be the first PO I'll be looking at. Potentially we might mitigate something within here. This is all very corrective and kind of messy. I don't really love any of it. So that's why I kind of rather look for those confirmations, whether we get 4-hour bearish chalk first, or whether you're happy to just wait for an M15 chalk, or whether you want to wait for the M15 actually change trend, and you're always trending in line with the M15 trend is what I would advise, right, for the majority of you. So yeah, let's have a quick look at mouse is spazzing out. A few M15 POIs within here. Don't know what's going on with that, but yeah. So we have this buy to sell, pretty obvious one, kind of following that supply chain there. There is an unmitigated inside bar in here, which you could drag across and view this as inducement, but for now I'm leaving it like that. And then we have this unmitigated candle here, right, following the mitigation of that extreme. So they're kind of the two ones I'll be looking at, but again, you don't have to just jump straight in. You can, ideally you want to see a bit of a build of liquidity and at least see a chock, right, and then you can start to look for something like that to play against that momentum. But yeah, longs are still pretty, looking forward to just continuing to trade with this bullish order flow. Can be decent. So yeah, this is the current swing range we're within. So this will be the swing low all the way down here, but I doubt price is going to pull back with this current momentum. So we'll see how we shape up coming into New York. So with that said, I hope you guys took some value from that, and I will see you in the next one. Cheers, guys.